Let's widen things back out to the bigger picture. For that, we want to bring in Ted Thatcher, president of Bright Lake Wealth Management. Ted, I don't know if you heard Kevin and I just talking about consumer sentiment, the reading that came out this morning. We know it's a preliminary reading. Market taking some cues from this. What's your takeaway from it?
It's a great question, and I did hear, and I also would agree with you. And as long as I've kept track of that number, I wasn't aware of the 440 or so sample size. I think that does speak to how solid that number is. However, the takeaway I have is that there does seem to be a real discrepancy between what's happening on Wall Street with the market near these all-time market highs and ultimately what consumers are feeling daily and weekly on Main Street. I think that when I have conversations with folks on a daily and weekly basis, Americans are feeling the pressure in their pocketbook. And it's hard for that, when it's sustained, to also lead them to believe that the economy is, in this outstanding, exceptional place, like they might believe if they just looked at, where the S&P 500 is sitting.
Based on your conversations with your clients and what the data looks like now, is there any cause for concern about the consumer?
Sure. Well, I do think that it's reasonable when we see where the consumer debt levels are that, the consumer can only go so far. The truth is, historically, the American consumer has been a very, very reliable entity, right? Very durable. However, at the end of the day, you can only get so much, quote unquote, blood out of the rock, right? There are only so many dollars that we have as Americans for our expenses. And so ultimately, I think it does come back to the Fed policy. If we look and we zoom out just a little bit, the picture that we've seen with inflation, so much about inflation, I think, over the last several years has dictated Fed policy, where, of course, Jay Powell would much prefer that Fed policy be dictating inflation. And so obviously we could talk big picture about what's causing that. I think much of it is being caused by, after effects from COVID and the pandemic, right? The sort of, in many ways, print and spend policies that had existed that are only starting to change even slightly now. I do say because of that, the consumer has been affected. That's the bottom line.
And then, so you're talking about the Fed and kind of let's extend this out a little bit and look towards the road ahead for the Fed. Inflation has been moving slowly. It's been stubborn, but it's been loosening a little bit when we think about the CPI reading, the PPI reading this week, and PCE has moved a little bit. We know that's their preferred measure of inflation.
Sure.
What's your take on kind of the road ahead for the Fed when it comes to inflation?
Great question. Well, ultimately, when we see the numbers that came out this week, as you noted, the CPI and the PPI, it came in even. And I think the truth is Jerome Powell probably had a little bit of a sigh of relief seeing it at even, especially after the spike we saw in the PPI and the CPI last month. And ultimately, of course, the Fed has noted that they plan on looking at interest rate decreases later this year. They're not going to be able to look at that seriously without some movement on the numbers. The underlying analytics are what comes to drive the Fed's decisions, that being the rate of inflation and, of course, the unemployment rate. When we see that inflation number start to, come down and certainly teeter around break even, it gives Jerome Powell a lot more cover to be able to lower rates. And that is to say nothing of the political pressure, I think, going into an election season that makes an interest rate decrease reasonably likely as well. When we look at the futures markets, I think the quote unquote smart money is betting on a rate cut around September. Now, if you're asking my opinion, I don't think it's very likely at this point that we'll get much more than a single rate cut this year. But I think from a probabilistic standpoint, it is reasonably likely.
Yeah, it's so funny that you say that because we had a guest on earlier who he was predicting too when he thought that the Fed should have cut already. I was surprised by that, especially because we know that the Fed especially Fed Chair Jay Powell has telegraphed that this is a data-dependent Fed. We continue to watch the numbers on inflation. They have never strayed from, kind of talking about that 2% target. So I think your response about expecting one cut this year, that's kind of becoming more likely the scenario, especially when we think about how we started the year, where all these predictions, where it was, the predictions of 6 to 7 cuts, which, the data just did not support that throughout the year. Obviously, we have the benefit of hindsight now. But how are you advising clients in the context of this continued, even if there is one, maybe two, that feels like a stretch to me, but this higher for longer environment, how are you advising your clients?
Well, look, I think that when you looked at the equity markets over the last 12 months, it's very clear that it's been incredibly volatile, very up and down. And so I kind of think about it through two lenses. One, I really like how my cash is performing right now. At the end of the day, a good money market account's over 5% in yield. That is a safe, reasonable rate of return in my book. And so having enough set aside that's safe, getting that kind of yield, I am reasonably pleased with. Now, if I am looking ahead, and if I'm willing to say I'm okay with a little bit of volatility, I think that equities, of course, are going to perform well because at the end of the day, that weight that Jerome Powell can put on the scale when it comes to interest rate decreases are going to have a significant effect on the value of financial assets. It's just the way that it seems the world works. And so as long as you're willing to suffer some volatility in the meantime, again, we know an election season's coming up. Typically, it's choppy around election years. As long as you're willing to kind of go through that little hell in the hallway, as they say, I think it might be rewarding come, early 2025 and beyond.
All right. Great insight. Ted Thatcher, Bright Lake Wealth Management. Thank you, Ted. Have a great weekend.
Thank you.